Hello, hello. This is Trade Like a Sniper, episode 6. In this episode, I'll be trading Palladium. This is not normally an asset I trade. I actually mostly trade forex, but for the sake of this series, I'll be using different assets and markets to show you that the concepts work and how you can have the same approach while trading. So, what does trading like a sniper mean? No, it does not mean sniper entries. It basically means being organized and patient in terms of finding your target, finding high probability targets, and taking your shot. Now, your shot is your trade, and your trade should be one thing. It shouldn't be trying to get more or less. It should be what it is. Okay, so I'll use the TradingView Replay tool. If this is your first time watching, and I will go back to a random point of time. I'll scrunch up the chart so it's a little bit more unbiased, and from there I'll do a top-down analysis. As I mentioned before, there's a couple of things that make this slightly of a disadvantage compared to doing this live. One, I can't go too far back without going and being able to go to a lower time frame. So at most, I might go to maybe the 30-minute time frame. If I go too low, there won't be enough candle data that TradingView will allow me to see. Secondly, I can't go back to higher time frames once I go down because um, TradingView will show me the entire range of the higher time frame candle, and therefore I wouldn't be able to. And therefore I would see information that I shouldn't see about the future. Okay, so yeah. Without further ado, I know this it's quite obvious what happens here, but this is the monthly chart, and I wouldn't be taking a trade on the monthly. I'll show you how I would do it on the lower time frames after analyzing the higher time frame. So I'll just squinch it up. Now, I won't go back too far because again I won't be able to go to too low of a time frame. So maybe from 2019, 20, any mini miny mo. All right, so now we're here. So let's analyze and do our annotations. So we saw price climbing higher, took out a low, and eventually came back up one more time with a huge wick. So what I'm going to note is the gaps here on the monthly. For me, I illustrate it with different colors. So my monthly is green. I even have a color for the yearly, which is blue. So this is a SIBI 1 month. I'll just annotate because I go through all the different months, most of them, 2, 3, 4, 5, 6, and then I just go straight to 12. 1 week, 2 week, 3 week, and 5, 4, 3, 2, 1 on the daily. Sometimes the hourly, but mostly on these higher time frames. All right, give me a second. All right. Sorry for the discrepancy in time. I had a coffee delivery just arrived. Yeah, in case somebody points that out. Okay. Let me see, where was I? Okay, on the monthly, we had a monthly come down here into this inversion gap, come up into this weekly gap, monthly gap, sorry, and one more time, a huge wick. But look where the bodies are, and look how they do not even come up into this gap. We get the bodies closed, and we have another pierce back up here. All right, so okay, yeah, came into there, and the thing is, we have a gap here. This is one of my signature gaps, and often gets a large reaction. So I'm going to be careful because I would like price to come down again and close below this gap and this gap. If it were bearish, and well, we do know it's bearish, but there's a huge wick here, so we do have to be careful. Okay, this is the monthly candle. Okay, came down, came back up into this gap again, came down. Let's see where we close. Come on, close below. All right. We did close below. We had a reaction there. Okay, so let's go down to the weekly now, I think, and we'll try and look for a trade somewhere in this range in order to take price lower and maybe see what we have here in this weekly wick. All right. So immediately, I want to take a trade in this inversion gap. I'm interested in that. I am just going to note this gap here as well. Guess I go to the lower time frames, right? Now we saw price come into the monthly inversion down here. Price may come into here this month, in the month of okay, this is the weekly, and next month is June. We're already coming down, so if we missed a bit, if it's going to move lower, where would I target this lows if I did? But I'll have to go down to the daily, see what we have. Okay, nice enough. We had a daily gap here. CB, 1 day. No gaps here at the moment, so I think we'd have to wait. Price is just consolidating. Okay, it went straight to the target. Okay, at this point, I'm going to go back to the weekly. I have nothing there on the daily. I want to frame trades on a higher time frame. Wait, no, don't do it. No. Okay. I would have liked to look for something in this gap, but all right, my bias is skewed, so it wouldn't be fair to say I would have done that now. But okay, if I were to, okay, price took liquidity here. Took liquidity, we keep that in mind, and then we want to target this low. Where else? There is relative equal lows here. So you can see that's a good area of liquidity. On the weekly now, you can see this weekly inversion gap too. Price close came back up. It's also a monthly. So you can see how all these time frames fit together. So don't worry. Let's see if we can catch a trade somewhere in here. Wow, that's a fast one. Not even on the daily. We go to the 4 hour. 4 hour. I don't see any other discount arrays. Again, I also can't see news, so I don't know what would have happened. So we see this huge wick. Unfortunately, it might be difficult to get a higher RR. Okay, let's see that wick again. Let's see the wick on the 6 hour, 5 hour, on the daily. Okay, let's annotate this wick. Premium and discount. In the middle, we have consequent encroachment. So price can trade back up to a wick. Go back to the hourly. And use that as a area of support, resistance. Let me put annotate a hourly CB here on the chart. Okay, so there's a CB here too. Occasionally in these quick reversals, do not come back up there, but we don't want too horrible of an RR. So I'm gonna put my stop here and just put entry here. And where would I target? Down here. So let's see if we get the entry on the hourly. Price is in here. Does it go down? Okay, we trade more higher. We trade higher. We do come into the gap. Again. Small gap here, an order block. Normally scary. Okay, so I have indicators that I normally use, such as session indicators. And I also consider news to build my narrative on what's happening. In this case, I cannot. We see price come to the middle of the daily wick. So I'm just going to put our stop at this high. The safest would be at that high to completely invalidate if we were wrong, I think. And yeah, let's see what happens. Okay, huge wick to the upside, huge candle to the upside. Okay, so let's say that trade is lost. We lost 1 hour on that trade. This, let's go back to the daily. You can see what happened, right? So you see the 4 hour, you see the daily, the rejection here. So that's why I can't go to too much of the higher time frames. Okay, so weekly gap in there. So it came into it twice, yeah? Great, so I'm still targeting that low. Let's see what happens here. Oh, actually, we do know what happens. Okay, price comes in, takes out that high, and then drops again. Okay, this could be the move. I'd like to go to the 4 hour. That's a weekly gap. Okay, let's just let price print into this small gap here. Consolidate. Traders be guessing. Price going up or down. Looks like it'd be going down. All right. Okay, on the 4 hour, we're down here. Okay, at this point, I'm pretty confident we're going down, right? We could wait for a retracement, or we could just put a stop. Really low RR. Let's see if anything on the 30-minute. 15. Okay, so there was a gap here. It could have been taken. A gap here. If you were bearish, okay, this hindsight, you can always wait for more gaps. There's a gap in here. You could ladder in positions and go into even lower time frames to confirm this pyramid. Let's see if we come into there. We do. We come into this gap. It's probably a higher time frame gap as well. It's 30-minute, 40-minute. It's an hourly. Okay, let's stick on the hourly. Let's annotate this big hourly gap. Okay, all right. The issue here I have here now is that we have another gap being formed. So let's see which time frame is in control. All right, so okay, let's keep playing. Okay, still in this terrible consolidation. Okay, so you can see this whole thing is a consolidation. I don't really trade Palladium. I don't know if it's normally like this, but in consolidation, sometimes you just have to wait for that large news event for smart money to show its hand. Price came into here. Okay, it's being very annoying. Cap here, Asia. Use it as support. Okay, when it's consolidation, so PD arrays aren't the best. You got to be really. Actually, there's no point if you're looking at it on a lower time frame, but consolidations on a higher time frame are a little bit better. Okay, so we got stopped out here. Let us see what is happening. Okay, let's go back to the weekly. All right, weekly came and use that as support. Let's go back to the monthly. Okay, we're still in this monthly gap, so well, very violent. Let's go on the weekly. All right, so came all the way to the top of this monthly gap, at least on the weekly. Terrible wicks here. Okay, daily. All right, again, we can see what happened. So it's a bit unfair. But let's see how fast we go through this. Okay, CB down here, used again. And does it come into this one? Yeah, it comes into this one slightly. Okay. So still playing around this monthly inversion gap. Right, so the idea is there. Okay, so correct. Yeah, if you see my previous episodes or if you know how I trade, the highest probability is taking a gap or an inversion gap is previous candle's low. Here, you see price come back into the gap and then take out a low. You can come again and still move lower on an even higher time frame and take out this low. Okay, but you can see how this low was the high probability target. It came into it to the take to this wick, rebalanced and came lower, took out that low. That's the highest probability. Okay, now the weekly is here. So we did come again on a wider time frame, and now we're moving through the PD array matrix, price delivery continuum. Okay, so PD array matrix. What does that mean? Price is bouncing from PD array to PD array, discount to premium on multiple time frames. It's fractal and it's kind of amazing. So on the daily, I would like price to come back into here, inversion gap, and another gap here. I'll just illustrate the inversion gap. So price bouncing from here, and it could bounce into here directly. So where could we put? There might be a PD array on a lower time frame. It should come into the gap somewhere, like here, or it could come into there. Let's say here. It could just come in. It could wait in here and still close below here. I would like the 4-hour bodies to close below there. The high targeting this low, but because this is not structure, it's just liquidity galore. Okay, doesn't even come up. There's a gap here. Can we use that? It does come up. And we get stopped out one more time. Okay. Let's fast forward and see what happened. We do take out the low here. Let's go back to the monthly. All right, so we played a lot in this area. Price is not moving fast, okay? But you can see where price is closing. Do you see the bodies closing below this gap here? The body is closing below this inversion gap here, inversion gap. The bodies are respecting it. Okay, so that's, if you heard, I'm sure if you follow ICT, you've heard that he's saying the bodies tell the story, the wicks do the damage. Okay, these are the wicks doing the damage to me. All right, but these are the bodies just following order flow, following the algo. Okay, all right. So I left my targets a little bit too high in this instance, because I said the highest probability is the most recent high. So we got stopped out a couple of times and price was still playing around in this area. Okay, for example, let's look at immediate highs, immediate lows. Just delete these gaps. Right. There's a gap here. Price came into it and took out the low. Great. there was a gap here. Price came into it. It did not take out the high because order flow was still bullish. Sorry, still bearish, and a higher time frame area of liquidity or low had to be taken, such as here. After that was taken, you can see that price comes into this CB, does not make another low, and instead pushes higher. It goes higher it gives no chance, no gaps on the daily to get in on this move. Probably on the 4 hour or less, there was opportunities, but it came into this gap. So this bullish gap would not hold because price is not going to move higher yet. Okay, and then we have news events and stuff. So it comes all the way down here. Then starts moving higher again. One more time, comes into this order block, moves higher. Over here, there's a fair value gap coming into an area of liquidity. Another gap here, so it moves from premium to discount. Takes out the high again, takes out the low. In here, probably a PD array on a lower time frame. Comes back lower to the order block. One more time, as high as it goes, and then starts moving lower. Is there any gap on this time frame? No, unfortunately. But if you go to a different time frame, let's go to the 2-day. Most probably. No, probably on the 3-day there's a gap. No, probably on the 4-day. Small gap here, doesn't reach there. 5-day. Okay, 5-day we have a gap. That's why you have to go through all the different time frames, which is difficult in this situation. So we come into this gap, does not even reach the midpoint, and then starts expanding lower, taking out this low, highest probability target, and eventually lower, as it's done its entire schematic already. So let's just note this is a 5-day gap. On a 1-day, okay, order block, but there's no gaps here. 12-hour, you'd be wondering, why is it coming back up to here and then expanding lower? Because on the 5-day, there's a gap there that price wanted to rebalance to after creating some relative equal lows, then expanding lower. So this is how I would work my way through the time frames. Okay, it is easier on doing it live because you have the luxury of planning way in advance, watching, you could say you could watch the weekly candles close as well, but you don't always have to wait for monthly candles to be forming. For example, let's go back and let's see how we could see it in a more real time, I guess, environment. For example, price. What did I want to? Give me a second. Yeah, let's find an example. We're on the 5-day. We had a monthly come into this gap, come again, and then a big close. All right, so what can we expect? This low to be taken. No, we can. Yeah, basically we expect price to come back into the gap and then take out that low on that time frame. You just have to frame one candle. You don't have to wait for multiple candles to form and market maker models. You look for these market maker models in just a couple of candles. All right, I'll show you what I mean. Just gonna highlight this in red, and let's just go back with a little bit of bias. Let's wait for candle to close. 1, 2. Gonna close. I don't know why for the monthly you print so much, but on the daily and weekly, daily is like instant candle, which is annoying. Okay, monthly. Let's go straight to the daily. Okay, monthly. Let me just highlight the monthly candle open over here. Highlight in green. Go to the weekly, daily. Is this right? Okay. Let's go to the 4-hour. So what are we anticipating? Price coming back into this gap. All right, 1 second. This is where we want to target. And say this candle was the close and open, I guess. Let's put it, just let me drag it a bit closer here. Daily. So close here, I guess. No, where is it? Sorry, it's in the morning. I am a bit dazed. 2nd of May and June. Okay, May, June. So we go to the 1st of June. All right. Okay. All right. Sorry about that. This is where June closed. We saw a big monthly red black candle. One more time. With a wick, which is this one here, beside this last one. So it's to the left. That wick is this consolidation back up here, and this is the next month's open. Okay, monthly open. Spike up and close down. Is this the move? Okay. What are we targeting? Let's just put it this high to be safe. Targeting this low, right? So this is what I would do. Does it do it this time? Okay. Yeah. So just on that one monthly candle, that's what I would be framing, right? If I have the opportunity, a price coming into a monthly candle, a monthly inversion gap or monthly gap, this is what I would be looking for. If I had a weekly gap, this is what I would be looking for. If I had a daily gap, this is what I would be looking for. Then I can go into a lower time frames. You can do this on a 4-hour gap, a 1-hour gap, and less. But remember the spread as well. So the lower of a time frame you are basing your trades on, your entries. If you're taking a trade on a 1 minute and taking a 2 RR, 3 pips away is your target, then obviously you're cutting a lot of your rewards down and increasing your risk because of the spread and commissions, if there's commissions. Okay. So monthly gaps, great. I love monthly gaps because there's opportunities for quite a number of pips. In Palladium, this is 141 pips. So there's a lot to be gained there. But as we know, on a higher time frame, okay, let me cancel this so we can go back and have a look. This is what we have. As I said, I don't only look at the monthly, because why price came back up, it could be different time frames. So we have this is a monthly gap, right? And we also have a 3-month gap, no 6-month, no yearly. Huge wick there for whatever reason. Fundamental reason. There's a higher time frame. Fundamentals do come into play. Economy crisis, pandemics, wars, etc. So the lowest gap's on the 3-month, and we can take that and target this low here. Okay, that's what I would target if I had a gap like this and I was bearish. But you may be thinking, okay, if that's my gap, right? And put your stop at this high, you would have got stopped out. It took out the high, but again, it's following the gap and it's still bearish and taking out the low. On a lower time frame, what does that look like? This humongous pump up here in March 2022. I forgot what that was, or any fundamental reasons with Palladium. But yeah, if you had the monthly bias and you know that, or a 2-month, 3-month bias that you had for price moving lower, then this is also a breaker. So it's a great trade to be taken, but it takes out the high, so it could have wrecked a lot of traders as well in the process. All right, so we took some losses here, but that's okay. It's not the ideal way of trading using this backtesting tool. There are other platforms that are actually better as well for doing this. I gave feedback to TradingView how they could improve. So hopefully they make it better, because I like using this platform to backtest as well. So hopefully they improve that. So yeah, if you have any questions on the video or you want to learn more, feel free to leave a comment or contact me on one of my socials. Till next time, R2F signing out.